Now, Pivotal Research out with its Pivotal Advertising Insights note today, highlighting signs of advertising acceleration for internet giants. Let's bring in the analyst behind that note, Michael Levine. Thanks very much for joining us. Good afternoon to you.
My pleasure. Thank you.
So tell us about this Advertising Insights, a new deep kind of dive report that you're doing. What's the headline takeaway?
So basically, just a little bit of background about the product itself. Surveys about 55 large agencies and advertisers, predominantly in the U.S. My estimate is that it represents $4 to $4.5 billion in annualized spend, so pretty significant. And in our experience, having come from the buy side as well, typically there's 3 to 4 large search agencies, partners for Facebook that the buy side will typically rely on. So I find this is a much more comprehensive product and something I've done for quite a long time.
We talk so much, especially when it comes to digital advertising, about the dominance of Google, of Alphabet, and Facebook. Is that still the case, or do you see other companies that are really starting to pick up market share right now?
I mean, we think that Snap is doing fabulously. We think there's a real tenor change in the business. Amazon, we think, is basically showing acceleration in advertising in both the second quarter and, as we saw in our survey work, in the third quarter as well. I think it's a bit of a different animal, though, where people can sometimes misunderstand. Where I think a lot of the advertiser base on Amazon skews towards consumer packaged goods and retail, because the beauty of it is that they're keeping the transaction on the Amazon site itself. So it's really a win-win for Amazon as opposed to sending traffic away.
How much advertising revenue are they picking up relative to their size, relative to the rest of the company? Is it going to have a meaningful impact in Q3, what you've forecast?
It's probably a disproportionate contribution to operating income relative to revenues. I mean, it's probably about a $13 billion run rate for the for the year, which is impressive, but it's still pretty small by way of comparison.
Whereas what you're seeing at Snap, is that, you think, disproportionate compared to what the market's seen so far?
I think that Snap really went through a lot of challenges in their first 6 quarters as a public company. There's a real tenor change that happened towards the end of last year. Snap had brought in as chief business officer an unbelievably strong and powerful leader in Jeremy Gorman, who basically was at Amazon for a fairly long stint. I actually had overlap with her back at Yahoo. The feedback I continue to hear in the channel from advertisers, from just from folks who've worked with her before, has just been glowing. And there's a dynamic that happens in online advertising where, when you have a change in sales leadership and you bring in somebody as strong as Jeremy into that role, you have this opportunity to go back to the advertiser community and say, look, we've made mistakes before, we've dropped the ball, you've known me for a long time, give me another shot. Now, the nice thing is this seems to be happening concurrently with a real turn in the business in terms of usage. So we think they're going to report a very strong quarter. Buy side probably does at this point in terms of users, but we think it's inflecting in a number of different vectors at the same time.